How are you?
I'm good, thank you. How about you?
I'm all right. What time is it there?
In Germany, it is 9:03 a.m. right now.
If you caught the Asian trade, when did you sleep?
Oh no, I didn't cut the Asian trade. It was just yesterday I analyzed it.
Oh, all right. I was wondering when you slept.
Yeah. Do we have the same time actually?
I'm an hour ahead.
Oh, okay.
Yeah, which is not bad.
Yeah, true. I thought we would have the same time though.
Yeah, me too. All right. So we actually caught the London opening.
Mm-hmm.
All right. Let's look at Gbpjpy first.
Okay.
All right, so remember last time we talked about how there isn't much like to analyze on the higher time frames, and since we analyzed last time, nothing has changed that much. So that means most of our zones still stand.
Mm-hmm.
So what we'll just do right now, maybe we'll just adjust the upper zone to the new one that was created, and then remember your trade gave us a new low. So what we can do, we can just add another low right there. And then we have a high. This is a minor high. We have a high right here. We're just going to highlight it like that. So if price is to go higher, it has to break this high. And if price is to go lower, it has to break this low. You see what I mean?
Yeah.
Yeah. So I think that's it on Gbpjpy. But then if we're using the no trade zone, right? Our candle is actually a very good one, because in the no trade zone you would have put your buy stop over here and then your sell stop below here, and then it would have been triggered the moment this candle opened, the candle that's printing right now. But then you notice how it has moved so much, and it's only 6 minutes into the hour. That means price is most likely going to push a little bit higher before it falls, because right now it hasn't given us the upper wick. It hasn't given us the upper wick, which price has to give us an upper wick for it to continue. Do you see what I mean?
Yes.
Yes. So right now, if you were waiting to take a trade right now, I wouldn't enter at this moment. Of course, the trade is there, and if you don't enter, you might miss out the trade. But if we're figuring out where your stop loss would be, then we have to be very careful, because right now we do have a strong bearish trend, because we had this bearish trend during Asian, right? And then price created a low, rejected to create a new high, over here, which is now giving us a bearish move. And since we have clean move, we have a clean traffic right here, price is most likely going to go lower all the way up to this level. So right now, if that 15-minute candle closes this good, and then the 30-minute candle, that means the next 15-minute candle, right, cannot close above this high, the high of our the high of our current 15-minute candle. Like if we got the 15-minute candle, this is all we have.
Okay.
Yeah, so if this 15-minute candle closes this good, right, then we can't, the next 15-minute candle cannot close above the high of this 15-minute candle. But then considering that we have a small support, this is a support, because if you see right here, price reacted to the same area, came all the way down, and when it was going up, it also reacted to that area. So price is most likely going to react around this area. So you can already see prices pushing higher, and we still have a few minutes to go for the 15-minute candle to close. That means it might even push higher to become bullish. So that's why it's not the best option to enter the first 15-minute candle of the new candle, because it's tricky. It has to give us an upper wick, but if it had opened and first came all the way up, maybe to retest this high, because this high has to be respected, then it started going down, we would enter, because it has given us the upper wick and now it's ready to go down. Right now it's still tricky, it's not ready to go down yet because of this support, and it hasn't respected the previous high, which is this candle. It has to respect this candle, but if it does close bearish right now, it's a good trade, but then price has to respect this high. Price cannot come all the way up, even if it's the next 15-minute the next 30-minute candle. It cannot come all the way up here, it has to respect it. So if we're using the no trade zone strategy, right, technically we can't actually find a trade on this because it trended during Asian, and one of the rules is if market trends during Asian, then there's no trade for London. So you can use the no trade zone strategy on the New York session. Actually, a lot of people don't know that you can actually do that. It's hidden in the book. Did you find it?
Sorry?
As in the no trade zone, you know how he talks about the no trade zone specifically for London session? In the book, it doesn't explain that much, but he explains a little how you can use this no trade zone for the New York session.
Yes.
Yeah. So on the New York session, you have to use the New York opening for your no trade zone, and then the New York stock market opening is the one that lets you trade the rest. So the New York opening would be your no trade area.
Okay, so for the New York opening, you need to draw new zones, right?
Yes. So for the New York opening, when it opens, right, from that time it opens until the time the New York stock market opens, that's like an hour 30 minutes. That's your zone. So those are your two levels, and then when the New York stock market opens, it has to hit whether your buy stop or your sell stop, but not in that range where the New York opened.
Okay.
So it's similar to this one, only this one we're using the Frankfurt opening. So you see right now price is pushing lower. So it's basically pushing lower because of the clean traffic. We had a low created, we had a high created, which it rejected. See, right? Okay. So price created a low right here, right?
Mm-hmm.
And then price created a high right here. It rejected this high and it gave us a new low right here, which was our first sign that if price came all the way up, right, when it gave us this candle, that's our first sign that price is gonna reject. And then we have a strong bearish candle next. That was our second sign. But then do you see how we have a strong bullish candle next to it? This strong bullish candle next to it was a good sign that price could continue higher, but then it didn't close above. You see, it closed below. If it had closed inside the range of this week, then yes, we would have maybe thought price is now chance of going higher, but it closed below. It has to close inside the range of the week, then price would have been invalidated. And then the next candle would have been your confirmation to enter. This cannot have been your confirmation to enter. So with pound pairs, right, especially pound USD and pound yen, their setup, if you want to catch a really good trade, right, it actually happens during the Frankfurt hour. That's actually what I feel like is the most important hour. That's where it creates its setup. If you watch it for a few days, you'll notice it's now different from Euro USD. Euro USD with the no trade zone, it works perfectly. It works very well. But then the thing with Euro USD is it starts giving you the setup after London is opened. During Frankfurt hour, nothing much happens. But with pairs like pound USD, Frankfurt hour, they give you the setup, because this was around should be 9 o'clock, I think. Yeah, should have been 9 o'clock. Yeah, this was 9:30. Yes. That reminds me of something. So during the Frankfurt hour, right, the first 30 minutes, they're going to go in a different direction. It's not going to go in the direction of the train, of wherever they want price to go. So the first 30 minutes, they trick you into thinking price is going another way, right? And then the second 30 minutes, right, maybe if the trend is strong and there's something good happening, the first 15-minute candle of that last 30 minutes will show you what's happening. But if it's not, then it's the last 15-minute candle of that 1 hour. So if you want to trade the New York the no trade zone, right, for pound pairs like pound yen and pound USD, it's best to wait until the last 15 minutes of that 1 hour. That's where you get your entry, and you get actually a spot on entry, because imagine when this candle had closed, right, it gave you the upper wick, right? That means either you would have placed your sell stop below the wick or below the closing, right? Price would have hit your stop, and right now you would be about about 12 pips in profit right now. That means your stop loss can be on break even, which is good, because the 50-minute candle is closed very well. It has to respect this high for it to keep on going down. So there are very high chances that price is going to continue falling from here all the way down here. It just has to respect this area right here. If it respects this, it creates a new support around here. Price should go down. So right now it's giving us the upper wick, which is a good sign. So if this upper wick manages to reject this high and then comes all the way to break here, closes maybe somewhere around here, price should continue going all the way down. So that's the trick with pound yen pairs. You have to watch them an hour before London opens. Not an hour, maybe 30 minutes, because you know what you're looking for, so it doesn't take that long for you to find it.
Yeah, okay, I wrote that down. Thank you.
All right. So since there isn't much for us to look at on pound yen, we already looked at a few days ago, and it's still going well. But right now, I think with pound yen is, if pound yen breaks this low, it's gonna continue going down all the way down here, because the only major support we can talk about right now on pound yen, something that would say might cause price to move differently, is this support right here, because this is the support. The reason why I'm saying this is support is because, see, price was moving higher. Price was moving higher right here, right? Although it wasn't moving very well, it did move higher. So I always say, if you see price pushing up like this, and it's not giving you strong bearish candle, price is most likely going to keep on pushing higher. It needs to give you a strong bearish candle for it to go lower, but it didn't. It kept pushing higher, because every time we got a bearish candle, right, price made a bigger bullish candle. If you see here, we have a bearish candle, but price made a bigger bullish candle. We have a bearish candle, but price made a bigger bullish candle. That means price kept on pushing high. But when we reached around this area, we do have some resistance right here, but price kept pushing. So when you're at this candle, this is a very good candle on all pairs, actually, especially gold. It works very well. So when price gave you this candle, it pushed higher. All right, when price gave you this candle, right, so it was creating a small range right here, but which was quickly disrupted, and then price made a new high right here. So when we had a new high right here, price had to create a new low, because remember, it had created a low right here when it was trying to go low. It was trying to reject price around this area, but price rejected the bottom and gave us this new low. So when price created the new high, here, price had to give us a new low, but for a new low to be created, it had to respect this low. That's why we have price creating this low. You can see how it didn't actually go below this low. It created a new low right here. So we're putting our zone right there so that it's touching both the wicks. It's setting both the wicks. So I think if price manages to break below this low, then we should see price sort of retest and then go on to this low, which is a good few pips. It's not bad. So from here, price have to reject this. It has to break this low for price to go lower all the way down here. This I want to say it's a strong zone, but at the same time, strong zones are very subjective. It depends with what you are looking at. But for me, I feel like we might see price come all the way down, right? Then reject it a little bit and then continue going lower. So either it might come down, then retest and then go lower, or it might come down, reject it for it to go lower. Do you guys have any questions?
No, I don't have any.
All right. So whilst we are still on GJ, I want to show you this. This is what we just talked about. So you see how price created the upper wick, and now price is trying to break. So the moment price, it's already breaking below. So since price is already breaking below, we should see price closing somewhere down here, and that would push price to our target around this area. So that was a simple example, but it's happening right now, so that's good. So right now, all we have to do is wait for price to reach this area, and that would have hit our target. I would actually be done trading for the day right now, because that was a good setup. It had a very small risk, because imagine if you had put your sell stop maybe below this closing, or even below the wick, right? Your stop loss. Your stop loss would be above here, because that's your high. Of course, your high is here, but then this is where the candles close. So if you find the candle closing back in the range, that means it's gonna go higher. So your stop loss would have been above here, and that's a very good risk to reward. Because right now it's only been 22 minutes into the candle, and you would be putting your stop loss on break even, or you would be taking some profits out, which is good. The fact that price already gave us this new low tells us that price is going to go lower. So no matter how it closes, as long as it respects no matter whatever price does now, as long as it respects this low it gave us and this high it gave us, so its own high and its low, so it has to respect its own high, it has to break its own low. It can't go anywhere above. So it might come and close somewhere here, or maybe somewhere here as a bullish candle, but whatever price does, it can't close above the high. So if you see price closing the high, then you know it's better to take your profits, or you're gonna have to put your stop loss somewhere safe, because price might go a little bit higher before it goes down. So that's all on Gbpjpy for now. Not a bad trade. I like this trade. I wish I took it. All right, so let's do GBPUSD next. Oh, now this one is much nicer. All right, So the reason why Gbpusd actually moved pretty well, this is what's fun. I've been watching this space for way too long. You know how pairs are correlated, right? But the thing with London opening is it's very fun to trade. Here's why. Gbpusd always makes the best moves during the opening of London session. If you want to catch a really good trade with no hassle, I would go for Gbpusd. Even pound yen, it's good, but it doesn't move as Gbpusd does. Like, it moves. So the same thing with pound yen. The same thing we have on Gbpusd. So Gbpusd, right, Gbpusd created a high yesterday. Was it the day before yesterday? I'm not sure, but it created a high right here. And then, oh wait, top down analysis. Okay, remember we said like it's not that necessary to look at the higher time frames all the time. So what we're going to do, we'll look at the 4-hour time frames just to check, but I don't think there's anything that new. Was this way before price went all the way up? Now we have a new high. All I had to do is put that high, and there's nothing else that we can worry about. Maybe around these rejection candles, that is a support, and then around this area when price tried doing its own thing. But for this area, I would put it right here, because that is where our range is. So if we go to the 1-hour time frame, see now we have 2, 4, 5. That's too many zones for me, but it's fine. We'll work with that for now. Okay, so we have a high that was created yesterday, and then we have a low that was created. This should be Asian session. What's the date today? Yeah, this was Asian session. A low that was created during Asian session. And then price rejected this low, right? So this low was created basing on this rejection candle. See how price was trying to reject right here. It was trying to push lower, but it could not. There was too much bullish pressure, so price pushed higher. And then during Asian session, it rejected, came all the way down, which got rejected, respecting these lows. And then price came all the way to retest our high, which it rejected. So before we talk about what's happening right now, let's talk about these rejections. I want you to take note of how tiny these candles are. Before we even go that far, right? If you look at these candles are also very small. This tells us a lot about what's happening in the market. So you know how the bigger the candles, the more volume in the market there is, the more bullish pressure there is. So we had big candles here, we had big candles here. And then when we reached this high, we started ranging, right? And then from this high, we went all the way up, but we have very tiny candles. They have no volume, they have no bullish pressure whatsoever. This was actually telling us that the trend is going to change very soon. So whenever you look at a trend, right, or whenever you get on the charts and then you see a trend, at the beginning it had very big candles, but as time went on, the candles got smaller. They got smaller, right? That means if you're looking at it at the other side, right, that means the bankers, the institutes, right, when they play, that means they place their trades, let's say at this bottom, right? That's when they got in, right? Price moved higher, the volume was there because a lot of retail traders were losing money, they were selling. One would sell when they see these candles, like these are good candles. They would think the trend is going to continue going lower, so they would keep on selling. But price reverse, or let's say they entered their, not even let's say, we know they entered their trades here. That's why we have big bullish candles, right? Small rejection candles, probably they took a very small part of their profits, but I would bet that people were still selling around this year because they were expecting price to reject this high. We all know this was a very strong resistance for a very long period of time. That means a lot of people sold around this high. But price broke out and gave us big candles also. See, big candle. And then price started consolidating, right? Or on this range, the breakout is not strong. The thing is, if you look at this breakout, right, even though they are not that big candles, right, it's stronger than this one. See, these ones have a lot of wicks, and the wicks are all in each other's ranges. But if you look at this breakout, it's clean. It's a clean breakout. It's different from this breakout. So instead of going crazy buying around this area, right, I would wait to see what price does, because as much as it keeps pushing higher, the candles are still very small. They're even getting smaller. The only time we got a big candle was on this candle, right? So a lot of people probably even entered more buys when they got this big candle, right? But we still got very small candles. Price is even when price pushed higher, it was still very small candles. And then we created a high. We created a minor high at this area. Let me remember what this. We created a minor high here, right? And then price made a good breakout. See, this is a very nice breakout. This says something, right? But then that's where most people got faked, because when they saw that price is now creating it's now showing more pressure, more bullishness and stuff like that, right? People thought price was going to go higher, but then these candles are not saying price was going to go higher. That's why we have this is a 1 hour candle, and then the next candle was like this. The moment the next candle is like this, I would not enter buys, because this candle is retracing 90% of the previous price, right? It has no wicks. That means it has no range. So whenever you see a candle with no wicks, it's better to stay quiet. If you are not in the market already, don't do anything, because it doesn't have any range. So price can do whatever it wants right now. It can go higher, it can go lower. It doesn't tell us anything. So we have to wait. So when you're waiting, you see price tried going higher, but it still came below. So this would have been your signal to sell. But then this candle also tried going higher, even closed bullish, but still it's not closing above our high. These candles were sort of rejecting the low, trying to push price higher. So this, I'm pretty sure this was around New York closing midnight, around that time. So price doesn't really form nice candles around that time. It just tells people whatever it wants to tell people so that they expect something. So if you were someone who likes to set their trades for Asian sessions so that they sleep and their trades do whatever they do, I'm pretty sure a lot of people bought, because price did try pushing lower, but it failed to create a new low. You see, we still have a low here. Price failed to create a new low. So when we get these rejection candles that are pushing price higher, I'm sure a lot of people set their buy stops maybe somewhere here or even above this, so that during Asian, price might come down, reject here, and then keep on going higher, which is what people are expecting here. So price during Asian, right, it came all the way down here, right? It created a low. So when price came all the way high, and then it gave us this nice bullish candle, right? People were obviously expecting it to go higher. That's why we have a strong bearish candle next. The reason why we have a strong bearish candle next is because a lot of people bought around this area, or maybe their limits, or their stops and all of that around this area. That's why we have a strong bearish candle right now, because a lot of people are losing money. That's one thing you have to know. For you to win money, someone is losing money, a lot of it. So that's what happened. So the moment you get this bearish candle, which is our no trade zone candle, so you'd have had your buy limits above here and your sell limits below here. But then the thing with pound USD, the same way I explained pound yen. Of course, the whole no trade zone work well with it, right? But then the thing with pound yen and pound USD is sometimes you don't even have to plot your no trade zone because it gives you the setup during Frankfurt openings. Like if we were to go down and break this down, right? Let's say 30 minutes. Let's look at our 30-minute candle, right? This is our 30-minute candle, our 30-minute chart. So we have our high right here, and we have our low right there. So when price came all the way down, right, we established our low, which is this area, and then price rejected, went all the way high. It actually created a high right here. But price came down, created a low right here. Then this price came all the way up and retested this high. So when you got this candle, right, because this candle, right, we had a bullish candle, and then we had this candle, which went all the way up, and then it came back down to close inside the range of our previous candle. Remember, we said if it closes in the range of your previous candle, chances are most likely it's going to reverse, or it's going to stay inside that range. So this week was our first signal, right? It retested this high, and then it rejected. So that's our first signal. The candle itself is a rejection, bearish candle. That's our first confirmation. And then some people would have entered when this candle closed, right? So maybe you would have entered here, but if you wanted to be sure, you would want your next candle to print, right? So here's the tricky thing. Either you can wait for the 1 hour candle to print, or you can go on the 15-minute time frame, right? And then you watch price there. But then don't just take anything on the 15-minute time frame. You have to be careful what you actually take. So on the 15-minute candle, on the 15-minute time frame, this is what we have. This is the 1 hour candle we're talking about, the bearish candle and the bullish candle, right? But then the next 15-minute candle of the next hour was this one, same as the pound yen, was this one. So when this candle closed, right, like I said, you would have placed your sell stop maybe below the closing or below the low. Either way, this was your second confirmation. This candle would have been your entry candle. That's your third confirmation. You have clean traffic. That's the fourth confirmation. And your target is right here. So when this candle closed below, right, if you wanted to enter manually, you could have entered right here, and you would have caught your trade would have been closed by now, right here. You would have been out. If you wanted to leave a runner, your runner would be deep in profits right now, because price is not going to stop from here. It will keep going lower. Because if we look at our 1 hour time frame, right, we have clean traffic also. I mean, it's the reason why I say it's clean traffic was, no matter, even though the candles are very small and have long wicks, they are still pushing in the price. They were still pushing price higher with little to no consolidation, right? And then the consolidation, I mean, not even the consolidation, the small pullbacks we have, this pullback, they were trying to push price lower. So I wouldn't see them as something that will reject price and make it go higher. It might come, then go a little bit higher, but it will still go lower. So I would see them as small areas where price might retrace a little bit before it to go lower, because this is where they were taking their profits. See, when price came all the way high, they took their profits, right? And then they did push price higher, but then they didn't have enough buyers in the market for them to sell price. So price kept going higher, and they took small profits. And then for them to get enough buyers for them to sell price, right, they had to give us this big move. This is where a lot of people bought, which would give us enough buyers for us to see, for them to sell price. That's also what they had here. Here, if you look at price here, right, I mean here, right, they didn't have enough people buying for them to sell, like people who were now expecting their sales, right? So they had to push price a little bit higher, maybe for the sellers to close their positions and then to start buying, because price looks like it's going to push higher. When they had enough buyers, then they pushed price lower. That's what happened. And then so maybe they placed some of their positions here, right? So then they pushed price lower, right? They took some of their profits here, pushed price up again, so that they can place their other orders here and then continue pushing price higher, because people were buying again around this area. So they were definitely had enough buy orders for them to sell price lower. So right now we can say they've placed all of their trades, but if they haven't, right, you will see price going all the way high again. And if you see a rejection candle here, that means price is going to go lower, because that means they're just placing their trades around this area. But then for price to go lower, you just have to take note, it cannot break this high. The high which was created by this candle cannot be broken. As long as price respects this high, price will go lower. So no matter how many times it comes all the way up here, you just have to notice that they are placing their trades for price to go lower. As long as it respects the previous high, price will go lower. So that's what happened. Like right now, we've created a new low. And if a new low is being created and a new high is being created all the time, that means price will keep on pushing in that direction, because they are leaving their imprint there that pushes price back in their direction. Do you guys have any questions? No questions?
No, everything's good.
All right. Which page should we look at next?
Gbpjpy.
Oh, we did look at it, but we can just go through it again. It's the same as Gbpusd though. If you look at it closely, they did the same moves, only that Gbpusd have a more proper range going on, because it's reaching its highs. On Gbpn, what it did is where it created a high yesterday, right? And then on that high, it rejected. I actually think people who were buying here should study something, because price created a high here, right? And everything that's happening next, the only thing that actually attempted to go break that high was this candle. After that, we have bearish candles, right? Like candles, they are pushing higher, but they are all closing bearish. Like if you see at these candles, they were pushing higher, but they're all closing bearish. The only bullish candles we have were at this area. This is where price created a new support, right? And then it created a new high right here, a lower high, right? And then all you had to do was, like, if you were awake during Asian session, all you had to do was to set your sell stops below this range, not even that range. Like this candle was a good confirmation right here, and then this would have been your confirmation candle, and then price pushed lower. Like there were no buy signals here. I don't know why people would buy. Maybe this candle, but I bet this candle was around closing time. So those candles, I don't take them seriously. So there were no buy signals. I don't understand why people would buy. And you had clean traffic to your left. And remember, this was a strong resistance also. Like, was it there? Yeah, that's a strong resistance also. So I don't understand why people would buy, because price is as much as it was rejecting this resistance or now support, right? It did managed to keep on pushing down, and the moment it closed back in the range, that was your full confirmation that price is gonna go lower, and it created a new low right here. It created a new low right here, which got rejected, right? And then we created a new low high. Remember, so we have two new highs that we created. So price came down, created a new low high right here, and then price came down, created another high right here. So now I'd expect price to come all the way down here. When I see what it does here, but technically it did reach our target, so we're good. That means if we enter again, we just have to watch price. We just have to watch price now. So it has to close with a bearish candle, then just to do something like this, close, right? And then just to create a bullish candle that creates new support, new resistance. And then if it shows us a bearish candle, then we know price is gonna push lower. So the only obstacle you will have is around this area, right? But as long as price creates a new high, that means price will push lower. So if you don't want to take that much risk, you can wait until price is breaking this low. But if you want to enter at the new resistance that's being created with a smaller stop loss, right, you just have to know that when price reaches this area, it might also do that again to create a new support and then continue going lower. So you have to be patient with your trade. That's all I'm trying to say. So you have to give your trade some time. I'm not saying give your trade some time without knowing what's happening. Right now, you'll be knowing what's happening, so you can give your trade some time if that happens. If it doesn't happen, it will just come low and hit your TP, and then it will reject from here to retest and all of that. But you would have already secured your profits. So because you know what's going on. So you see this candle, right? If this candle, there's still 15 minutes to go on this candle, so I would not say it's a rejection candle yet, because we still have 15 minutes, and that's a long time. But if this candle comes all the way and it closes in the range of this candle, I would wait on the sales, because if it's closing back in the range, that means now we have high chances of price going higher. And if we have a chance of price going higher, that means if we're still in sales, we're gonna lose. So I would wait, but I would wait for price to close above this high. See, you do have the option of taking this trade all the way up here, but I wouldn't. One, it's a very small range, so you're not really getting enough pips for your risk. And two, there are very high chances that all of this week might cause some distraction. So the best thing to do if you wanted to enter a buy trade on this period is to wait for price to break this high, and then you can enter the trade. Trust me, the only thing that's hard in forex is waiting. If you wait for price to reach a certain area where there's clean traffic and everything is in line, you probably have more winning trades. All you have to do is wait. Right now, if you take this trade, I don't think it will be that of a clean move. It might be, but it might be a very stressful trade. So it would be best to wait when it breaks this high. Then you know price now is very high chances of moving higher, because we even have clean traffic on that high. But for price to keep on going higher, it had to create a new low. This is a good low, but for it to keep on going higher, it has to respect this low. If it breaks down this low, the trend is changed. Because it's back in the range, the trend is changed. That means they're trying to reverse price from here. We don't know what's going on, but yeah. Any questions?
I have just a question.
Yeah.
I want to ask, is it possible to make use of trend line, and if it breaks this downtrend, the trend line, then you can enter it by and trade it to the resistance?
All right. Let's look for a trend line. We'll start with the 4-hour time frame.
No, I mean on the 1 hour with the
but I want to check where the trend line is on the 4-hour time frame.
Oh, okay.
So on the 4-hour time frame, we have this, right? That means on the 1-hour time frame, we don't have a trend line, because if on the 4-hour time frame, this was an impulse correction impulse, was it broke this high, so we can call that an impulse. So we always use our two recent impulses to draw our trend line, which is this one and this one. So if I use these ones on the 4-hour time frame, right, when I go on the 1-hour time frame, right, we're not going to have much of a difference, because on the 1-hour time frame, what I would have is, this is the 4-hour one. On the 1-hour time frame, let's say we're drawing a trend line on the 1-hour time frame, we would use this peak right here, and maybe this one. This is the one that got broken, right? So price, we used this one, correction, and this one. Those are our two recent impulses, right? So price came down, it broke, right? It created a low on our 4-hour trend line, right? And then price came all the way, it retested the trend line and the support that it created, around this area. It also retested the trend line, right? And then price went lower. So for price to keep going lower, we needed to close around this area. That's what I'm saying. This candle cannot close back in this range. It has to close somewhere down here. And when it closes somewhere down here, it has broken the 4-hour trend line. That means the trend has changed. But from here, it would probably do something like this, retest, creating a new high, and then it goes lower, like this, like on the higher time frames. Does that answer your question?
Yes.
Yeah. So it's always good to know like your trend line on the time frame that you're trading, and then your trend line on the time frame that's higher than the one that you're trading. So just in case if price moves, or if it breaks the one that you're trading at, you know where it's going next. That's the same way we always put our next resistance or our next support. Do you guys have any questions? Because I think we have like 3 minutes left.
I want to ask, when are we going to talk about supply and demand and how to make it of it?
Somewhat?
Supply and demand. You talked about it some time ago.
All right. We can do it, but then the thing with supply and demand, to be honest, is the same as support and resistance. I don't know why people use fancy words for these things. The thing with Forex, right, is everything that you learn, it's all the same. No matter how much someone else teaches you in another way, it will all lead to one thing. So it's best to keep it simple, because right now, if you understand support and resistance, trust me, you understand supply and demand. If you were to draw your support and resistance and someone drew their supply and demand, it's the same thing. I think the most important thing that I have to teach you is order blocks. That's the most important thing, not supply. Order blocks. Yeah, we would do it later, but not supply and demand. Like we are already doing supply and demand, because this was the supply, this was the demand. Like there's nothing special about them. They just use fancy words to trick people into thinking that whatever they are doing is much better, like it is higher qualities and things like that. Otherwise, it's all the same, to be honest.
Okay.
Yeah, so we'll try our best we'll learn everything, right? But we'll try our best to keep it simple, because the simpler it is, it will be easier to remember and to follow. But we'll do everything. We'll just keep it simple in our own way.
Okay.
Yeah, so for now, I would say if you want to look at a pair, Gbpjpy. This pair is very interesting. Like if you've never looked at Gbpjpy before, give it time, look at it. It's very interesting. It's a good pair. It's a little bit slow, but it's a very good pair. So if you want something to look at, to practice on, I would practice on Gbpjpy. And I would love to say God, but no.
God, the way it moves is crazy.
The thing with God is it has one setup and one candle that I've noticed so far that works. I have less than a minute, but I think our next session we can do it on God. I'll prepare everything. I'll find the setups and the candles to show you, and then we will look on God on our next session.
That would be great.
Yeah. So we have